I'm Don Creech.
And I'm Perry Sykes, and welcome to the Investor Resources Podcast.
So we are recording this on the 22nd of February,
Indeed.
right after we've had a massive what is reported in the media as a massive sell-off on Friday. Across the board, stocks were collapsing. Well, that's kind of a matter of perspective, and that's done and framed in a way that we've been set up to believe disaster was coming because of the concentration of the Magnificent Seven stocks and the advent of AI being promoted by media. And within the past few months, the announcement that China has come up with DeepSeek, which was going to replace all of US AI development, which we now know was basically the same thing they do with everything else. It was intellectual property theft, basically reworking ChatGPT to make it look like it was a Chinese innovation from scratch. It's
Shocking,
not.
right?
It's not. But the fear of a bubble has been perpetrated by financial media, online gurus selling stock tips, how to trade meme stocks, how to take high risk with your money, basically.
Sure.
And
Yep.
so we do have an amount of fear that's been built up in the market in anticipation of things. And then we have the announcements that are flooding out of the White House with the way things are going to be different. This is not your father's Oldsmobile, as the old ad goes.
Yeah, everything's about to change. Yeah. So,
Speaking of which, the Oldsmobile is a GM product.
yep.
With the advent of tariffs, it's hurt automobile stocks. It's also hurt home building stocks. But GM has been hammered, as has Ford and Tesla of recent. But GM's now trading at a PE of 4.
Wow.
Who ever imagined you'd get General Motors, massive international company, trading at a PE of 4?
It's a value stock now. So
it is. Change is rampant wherever you look, and it's really easy to get your mind messed up.
It is.
And Perry, you
Especially with
found
the headlines. The headlines are just spectacular. I mean, it's important to remember that's the job. That's their job. They're trying to get eyes on the screen or clicks on their link or subscriptions to their newsletter. And so the bigger the disaster or the triumph, either way, the better. And media of all varieties are not immune to saying, well, let's just blow this completely out of proportion. We'll have another. We're doing this again tomorrow anyway. It doesn't matter. We can correct it tomorrow. Let's just today. It's the end of all things we know, and it'll be great for ratings today. And of course, it's just not true. But it's really easy to get caught up in that. And then when they start talking about a bubble, investors really get worried. Okay, this could really wipe me out. Or on the other side, FOMO sets in. It's like I've got to be a part of this. It's blowing up without me. I've got to go. Both of those emotional responses are very dangerous to your portfolio because neither one of them is usually true.
So there have been frequent references comparing AI to the tulip mania. This
Sure.
makes no sense, and it's going to collapse. And when it does, you're going to be broke.
Correct.
But this time, I believe, is different. One, we have a great deal of communication. Sometimes that's a disadvantage. But
right.
we end up with an information overload and forget to take time out thinking about just exactly what are we doing.
And little context. Yeah.
In one of the articles that you found referencing tulip mania, there's plenty of them around if you go do a quick search. What caught both our eyes was a quote from Dr. William Bernstein, he's a retired neurologist. He has a PhD. He's also a money manager now in his retired years. But back in 21, he was interviewed and made a quote that caught our eyes. So from Dr. Bernstein, quote, "To the extent you succeed in finance, you succeed by suppressing the limbic system, your system number one, the very fast moving emotional system. If you cannot suppress that, you are going to die poor. We're all going to die. The question is, are you going to die poor? And your emotions apparently are the driver that's going to determine that.
How about that?
We hadn't thought about that. Well, you and I have. We've discussed this before.
Yep.
But that's a matter of keeping things in perspective. And so, since we are on the 22nd of February, we are looking at what happened on Friday, and I'm going to share a screen here right there. That should be up.
Got it.
So we use Japanese candlesticks to look at the market action on a day-to-day basis, or any time frame we're using. So this Friday's candle is the fear-mongering news from Friday. And when you look at that relative to the other candles, you say, oh my goodness, things are falling apart. That could easily be your initial reaction. But the day itself was down less than 2%. And from the high of Wednesday to Friday's close is just barely over 2%. That's not a big move in the market. You should not be getting a strong emotional reaction until you get greater than a 10% reaction. And I just mentioned a moment ago, we need perspective. And so let's go back a little bit here into the past couple of months. And so I've scrolled back into September and shaded this area that from a technical standpoint, we call a trading range. So the market has been bouncing off of price levels where buy the dip investors have stepped back in and said, that's cheap enough for me. That's a bargain. I've been waiting for a pullback, and now I'm going to put some money in. And we have some higher levels that have created buy the dip activity. And recent interviews of major money market managers on Fox Business that I listen to have said buy the dip is where it is in this marketplace because the value is there, the trend is there. AI is an expansive addition to our economy. It is not, while it's higher than we've seen before because of its expansive development and adoption,
Sure.
it is not yet bubble characteristics. Unless you want to scare somebody, you can build a case for it because
Right.
we're up at new highs. You say, well, it can't go any higher than that. Can it?
And that's so important. That perspective is so critical to keep because if you're thinking about artificial intelligence and is it a bubble or not, and is it going to collapse, you need to keep in mind that it is currently used by every major corporation on earth now. AI is not something that's coming. AI is not something that's going to be integrated into business. It's something that's used daily now. So it's not that it's going to all of a sudden be recognized as a fraud and it's going to go away, but it's no different than any developing industry. Uh, we were talking earlier, Don, that when cell phones came out, there were hundreds, maybe thousands of cell phone manufacturers out there, and hundreds and hundreds of cell phone companies vying for everyone's business. The vast majority of those companies don't exist anymore. They all get there's a big shakeout that happens in an industry as it matures and it begins to coalesce around the winners, and that core strength is where it remains. AI is going to be the same way. There's going to be a lot of things that are brought up, many, many, many tools. There are thousands of AI tools available. There's not just ChatGPT and Grok and a few of the big ones that people know about. There are thousands of individual AI tools that are in use today, and a lot of those are going to end up blowing away. There's not enough usage that's going to keep them all, and they're not all that great. But the good stuff is going to float to the top. The rest of it is going to get erased. But that doesn't mean the industry's leaving. That doesn't mean there's a problem with AI. There's not. It's already integrated into business globally, and its impact is going to increase, not decrease. So it's going to be a matter of where's the growth and who are the winners, and those are going to be the questions that you need to ask. those are the times when you need to get your limbic system under control, because there are going to be plenty of people that are going to come out with this absolutely unbelievably great story. Here's the next big winner in AI. In fact, it can't miss. Yeah, well, it can. And so you always need to take a minute, get some context, look at the bigger picture, and try to decide, is this really somewhere we should be investing our money, or is this another one that's likely just to be a flash in the pan and disappear? And that's going to be the challenge. Not if it's going to come to stay for good, but who's going to be the winners. That's the only thing that we're really going to need to parse out here.
Well, AI is a new label for something that's been around a long time.
That's true too. Very
When
true.
when I left the brokerage business and established Investor Resources back in the 90s, actually in 1990, one of the meetings I went to was sponsored by some brokers in a wirehouse, and they were demonstrating their work with, listen carefully, neural networks. They
Ah,
basically were training some software to make better stock selections in 1990. We happen to subscribe to some AI software for analysis and predictive purposes with markets. And when that program was developed 20 years ago, there were, as you had mentioned, there were many different companies that were developing neural networks that they could test
right.
their network, their own network against. But as they've done that recently, and I just read a paper that was updated by an independent firm on the accuracy of the AI program that we use, that was updated in 21. So just a couple of years ago. And one of the points they made is the number of companies that were around 20 years ago to compare results with were plentiful. Today, most of those companies, as you just said, are out of business, like the cell
They're
phone
gone.
providers.
Yeah.
And I remember one of my early jobs before I got involved in actually working with clients was as a trainer for with financial planners around the Northwest. So I traveled a lot. And we didn't have cell phones at the time. The first one I saw was actually took a briefcase. You carried it around in a briefcase. And it was kind of
Nice.
clever. You could open the briefcase up and dial your phone. But if you wanted a communication as you traveled, which I did in the car, I had a radio phone in the car. And depending
Yep.
on which district I was in, I'd have a different button for a receiver. Well, those are not very popular. I'm sure they are with construction companies today, but they've been replaced by cell phones. And you have a few major providers, and that's basically it. That's where AI is going. So when we take a look at Friday's market action, while we probably we have a high probability of getting a few more days of selling, we're coming
Right.
into that same price range where buy the dip activity has accelerated and we get a bounce. Now, how do we get into new highs? One, retail investors have been attracted by 4.5%, 5% interest on treasuries and corporate bonds. And they haven't had that for a very long time. So they kind of like that interest rate and they're
Right.
keeping their money parked there until they feel comfortable with the market valuation. That probably will happen when the market is much higher and fear of missing out, or FOMO, as you referred to it a few minutes ago, takes over and their limbic system in their body says, I should have been in the market a month ago, a year ago. I mean, I'm sitting on the sidelines. What's happening is there is some rotation and there are places to be that are more attractive than the US market right now. And we haven't seen that for a while. But some of the
Bet.
changes that are coming out of the administration are forcing global changes, not just US market changes. And our approach to dealing with money management is to rotate into strength and not get overwhelmed by the fear of losses that are temporary in what is basically a relatively weaker marketplace than where you could be invested.
Sure.
If you want help with that, you should give us a call. We're available to talk with you or even do an analysis of your portfolio for free. If you like what you've heard, subscribe to us. Contact information's popping up on the screen. We'll be back with another issue in a few days.